Boom! It is Power Hour Live. Extravaganza.
All right, guys. What's up, everybody? It's Power Hour. We are here for the final trading hour of the day, the final trading hour of the week. And what a week it's been. What a week it's been, folks. I mean, just an absolute rip your face off bear market rally that we have cooking here in the overall markets. We just poked up our head through fresh session highs. We just cracked over 413. And man, I got to tell you, we sniffed out this bear market rally about as good as it gets. You know, we've been talking about on the live streams now for the last week or so that we were looking for a nice green week this week. And this isn't just a green week. It's a big week. You got a lot of indexes. Some of your indexes are up, 10% off their lows. Up about 10% off of their May lows when we had that flush out day on the 20th, which was that Friday. And we've just been green ever since. You had one little shake-up day on Tuesday.
Sorry, can you hear Glennie now? Glennie, talk.
Can you hear me?
Yeah, I can hear him.
Okay,
Yeah.
cool.
Sorry about
Go ahead,
that.
Mike. Sorry.
That's okay. So yeah, and we've just been green ever since. The S&P has broken above a pretty significant level of resistance. I feel that we are inside. I feel that we are inside of a key zone of resistance that's pretty big. It's like it's not necessarily one specific level. It's not necessarily one specific level where it's like one price point on the SPY. I actually think that this is the biggest range of resistance that I can see on the daily chart. When I look at the daily chart of the SPY and I start looking at where are there areas of resistance, this level is really from like 407-ish all the way up to like 415, 414. And that is a huge area. And I'll go to the daily chart just to kind of show it to you guys where I'm getting this range from. And it's really this range that you see in here. Okay. This is kind of that level that I'm seeing as, a previous support zone from the Russia invasion low. Then you had these previous little pivot double bottom lows before that March rally. We sold it off. And then you can see how you got some support that started to step in. And then you broke underneath it. Then that area became resistance. And now you're starting to poke your head back above it, but you're still inside of this range of resistance. So once you get over 415, that really, I would say, takes you out of that resistance zone. All right. So I still think we're inside of this area. 2 huge green days back to back. Low volume, though. If you guys take a look at the daily chart and you look at these 2 volume bars that you have sitting here, that's low volume. It's very low volume on these last 2 trading days in comparison to the volume that we've seen over the last couple of weeks. So, we'll see if we can get through that 415 level. I did think that this bear market rally was going to be one that was going to push and was going to test people. This is going to be a bear market rally that I believe is going to make everyone feel like the bottom is in. It's going to make everyone feel like I've missed the bottom, and it's going to make everybody chase the market higher. And you have people that did not buy when we were at 390 in the S&P, but are now wondering, should I buy now at 414? We came on this live stream a couple of weeks ago. It was on May 10th or 11th, I believe, and I told everybody that I had began nibbling in my long-term portfolio. I bought 9 different stocks 2 weeks ago when we were cracking underneath 400 and we were down around 390. Nobody wanted to step in and start to become a buyer when the markets are heading to the downside. But now that you get 2 green days, everyone on TV, everyone on social media, they're all talking about, oh, that's it. That's it. The bottom's in. That's it. We got to buy. Everyone's has completely shifted their investor sentiment. We were, bearish last week. Now all of a sudden, last week the world was ending. Inflation's not going anywhere. We're recession. The economy is slowing down, and this Russia war is never going to end. The world was ending a week ago, and now today the markets are moving higher. And a week ago, I come on and I every day I tell people that this is a wealth building opportunity. And you got to get yourselves ready. You got to get yourselves prepared, because within these next couple of weeks, and this is what I've been saying for the last several weeks, is that is when the long-term portfolio opportunities are going to present themselves. Okay. And now you see today, you just had this week the largest inflow into equity funds that you've seen in the last 10 weeks. Okay. So I've been telling you that your window of opportunity is closing, and I've been telling you guys to get educated. It's time for you to get yourself prepared, because now institutional investors are getting prepared. You just saw the biggest weekly inflow into equity funds in the last 10 weeks, which means institutional investors are starting to get their money together to take advantage of the opportunities that are in the market right now. And that's something that we have been saying on this live stream for weeks. And now the market finally starts moving higher a little bit. Now everybody wants to chase the markets higher. So we're going to talk about this bounce. We're going to talk about, is the bottom in? Is it just a bear market rally? Do we head back lower in the next couple of weeks? We're going to break all that down. We're going to talk about it in the final trading hour of this session here on this live stream. With me tonight, guys, joining me is one of TTG's Pro Trader moderators. I've got me here today, joining me from sunny Bahamas. Okay, everybody give a big warm welcome to Glenny.
Hey, everybody. Happy Power Hour.
Yes.
You can finally hear me now, I guess.
I love it. So as I kind of talk people through, what I believe that this is a bear market rally. I do not believe that the bottom is that the bottom is necessarily in. I'll be one of the first people to come out and tell you that, because as soon as the markets go up for 2 days, you're getting a lot of people on social media that are saying, oh, that's it, bottom's in. I don't think so. You're going to get the Federal Reserve is going to begin their balance sheet runoff. There is one positive thing, though, that happened fundamentally today that is giving you a boost in the markets, and that is one of the inflation readings that the Fed uses has actually come down from the month prior, which is showing that inflation actually began to slow down. The fact that inflation has begun to slow down feeds into the argument that we have seen peak inflation, which is a good thing and is going to bring buyers into the market. And that's what you've seen now for the last couple of days. Okay. But I believe that you're going to have more. I don't believe you're never going to see the SPY back under 400. I do believe you will see the SPY back under 400 in the next coming couple of weeks. But this bear market rally could really test people's patience. And I think that this bear market rally is going to push. We just got to here. We're at 414. I do think it's possible you can see this bear market rally take you above 420. I think next week we can get above 420, maybe even get to 425. So I do think that this bear market rally can push and does have more legs. But I do believe that you'll eventually see then another pullback that takes the SPY back underneath 400. And if anybody missed the buying opportunity that when we entered a couple of weeks ago, when you drop back beneath that 400 level, you better get your shopping list ready and you better be ready to put some money to work. This is why, very specifically, when we've done a lot of long-term investing workshops inside of True Trading Group, where I kind of teach people how I go about building my long-term portfolio, and how I kind of go about doing all of that, and when I go and when I add to my positions and how I do it. I don't try to pick the exact bottom. You have to look at buying zones and spread your money apart. And what I do is I break it up into 3 pieces. I take the total amount of cash that I have that I want to invest. 25% of it goes into the market first, then 50%, then the final 25%. Okay. And for those people that try to catch the exact bottom, okay, if you try to catch the exact bottom, you will miss it every time. Okay. and you ask any professional that does this for a living, if you try to wait until the exact bottom, you're going to miss it every single time, which is why I work on scaling into your positions over time. So my first entry in the long-term portfolio was right there. Okay. This was where I entered in my long-term portfolio when I began adding. Now, we took profits off in the long-term portfolio at the end of last year. Very happy that we did. Okay. But now I started putting about 20 to 25% of that cash back into the market right there in early May, once we dropped underneath that 400 level. Now you can see we're back to 414. But do I think that the markets are just going to do this and just go right back up to highs? No, I do not. Okay. I believe this bounce is going to test everyone's patience. It's going to make you feel like the bottom is in, and then you're going to get, a slow roll back over and a slow little pullback. And then you'll be able to buy, back down here if you like. And then if inflation does not continue to come down, then you have the chances of actually breaking beneath that lows and continuing a little bit lower and getting the S&P down maybe about 25% instead of the 20, which is the low from Friday. Okay. So that's kind of, my thoughts on this bear market rally. Glennie, what do you think, man? I mean, you've been around a while. You've seen a lot of bear markets, a lot of bull markets. What are your thoughts on this rally here? I mean, do you think that we kind of found the bottom, or do you think there's still a lot of volatility ahead for us? What are your thoughts after seeing these last couple of days?
I don't think we've seen bottom, but I think it's a bear market rally. I think that the market was looking for something to grasp onto. They were looking for some positivity, and I think we got that today. In the last few days, I mean, if you're looking, well, today we had the core personal consumption expenditures index, which showed that it rose. That's what the Fed really favors, that over CPI. It shows a 4.9% rise in April, which is down from previous month, which was 5.2%. So they really keen in on this particular one. And if you look at where the 10-year Treasury has gone, you've seen the retracement down from 3.2% down to, it's been hanging out here at the 274. So we've come down quite a bit on the 10-year. But I just think the market was looking for any bit of positivity, anything to hang their hat on. But I don't think that we're out of the woods here yet. I think we have another leg down. And I also think, let me ask you this question, if I may. Do you think that the rally today and some of the extending of the rally this afternoon is based on the fact that we're getting light volume, and that these moves are exacerbated because the sellers are already at their house in the Hamptons and on the shore?
Yeah, I do. Typically when you have like lower volume days, when you have direction, that direction tends to extend or overshoot because of that lack of liquidity, and it's a lot easier for price action to move when you have a lot less market participants. And you really did get sellers were exhausted after 7 consecutive down weeks. I mean, sell programs were extremely aggressive in the beginning of May. I mean, you had very, very, very high volume sell-off days in May. You had very, very high volume sell-off days at the end of April. You went through about a 3 to 4 week period where, I mean, you really had some very high volume sell-off days. And, markets don't go down in straight lines. They don't go up in straight lines. I really, truly believe that it was just seller exhaustion after 7 consecutive down weeks. You're going into a holiday weekend. You got a perfect storm set up as well for this bounce. And that was a little bit of a shift in tone from the Fed in the minutes that came out. But again, you got to remember that the minutes are old. The minutes are from a couple of weeks ago. So some other economic data has come out in between the Fed minutes when they actually were taken and when they were released yesterday. You actually got a lot weaker economic data that came out during that time period, but the Fed had already begun, it looked like in the minutes, to shift their tone a little bit and seem like we're going to get maybe 2 more 50 basis point hikes, maybe 3 basis point hikes, and then they're going to wait and see. You're starting to get a little bit of that shift in tone where a lot of people talk about the Fed put. And like, what is the Fed put? For those people that don't know what that is, it's essentially that for the belief over the last, decade or so, that whenever the markets went down a certain point, that the Fed would step in with a policy change that would reverse course. And then people look at where is the Fed put, like how far is the Fed willing to let the markets go down before they shift in policy, and then the markets end up recovering. The COVID low in 2020 was put in place not based on anything about the virus itself or vaccines or anything like that. The COVID low was put in place when there was a policy shift by the Federal Reserve, and when the Federal Reserve made an announcement that they were going to be buying corporate bonds and they were going to be buying treasuries, mortgage-backed securities, or basically going to buy whatever that anybody wanted to sell. That shift in monetary policy put the bottom in the market in 2020. The markets never looked back. That's what people look at as the Fed put. How far is the market's going to go down before the Fed changes policy? Okay. And there was the debate this year that there is no Fed put this year, that the Fed is not going to come to save the day because they can't, because they have inflation to worry about. And they're at a point where they have to raise rates no matter what the economic conditions are, because you can't just let inflation continue to run, because then it becomes a problem that you can never get under control. Okay. It's like letting a fly out of a cup and then trying to go and catch the fly. It becomes an impossible task. So the Fed's not going to be able to stop. They're not going to be able to reverse change policy this time. And that's why everybody was so scared during this sell-off, was because they didn't think that there was a Fed put. Now, that little change in tone, like Glennie said, that's what the markets were looking for. Any type of positive, anything to grasp on, anything for buyers to say, because stocks have been beaten up tremendously. Valuations are starting to look a hell of a lot more attractive. Bulls needed just a little reason. They just needed a little push to go down the slide. Okay. Or in this case, climb the ladder.
Yeah, there's FOMO out there. I think
for sure.
People didn't want to miss out on the run. At some point the market turns. It always does, and I think people are trying to get ahead of it when it may not be. The bottom might not be in place. I don't think it is.
Yeah, I don't think it is either. But this just goes to show you guys. Shit. Good one, Adam. That was quick. You did that quick. Nicely done. Good job. Mr. Miyagi says, "What are you talking about?" I love it. But the way that everybody feels right now, right? Even though I'm telling you that, hey, I don't believe that that's the bottom, and we're not going to get a V bottom. I don't care. We can go back to 430 on the SPY. We're not getting a V bottom. A V bottom means you see how the markets went down, basically straight line, and then we're going to go back up and create a V. That is not my opinion. That is not what's going to happen. But this balance could continue all the way up. I'd say easily we can continue up to here. I'd say that this bear market rally can take you back to 425. I do believe that it could take you back to 425. It's possible. Okay. Bear market rallies are very, very, very strong. I mean, look at the bear market rally that you got in March. Look at that. Look at the size of that move, right? And then what happened immediately preceding that? The market sold off. So You can easily get another move back up there into the 420s, and then the markets can then sell off again. If you go back through history and you go back and look at all the deepest bear markets that you've seen, there's always these very violent moves to the upside that makes everybody think the bottom is in. That's what makes the next sell-off. That's what makes the next sell-off so vicious, because everybody jumped in long thinking the bottom was in, and when they realize it's not, the trap door opens and you get that next leg to the downside.
Right.
I want to real quick. I got to give you guys a code word, but then I want to keep on this topic because I want to go over some important stuff about the topic we're discussing right now, guys. The code word for tonight. All right. This is for members only. If you're not a member of True Trading Group, don't worry about this. We do a bunch of fun giveaways. We give away cash and electronics. If you're not a member, don't worry about it. Okay, the code word for tonight is power. This is code word number 13. Okay, this is code word number 13. The code word for today is power. That's from my TC fam. Code word is power. So getting back to what I was just talking about, this is why it is important for, as markets decline, you add in your long-term portfolio and you don't do it all at once. Because if you do it all at once, you are stuck. Not, and even if this is, let's say I'm wrong. Let's say this is the bottom. And let's say the market by August is back to here, which it won't be. But let's say that's the case. Okay. Let's say that I'm wrong. That's the bottom. What happens now is this. Everyone says, oh, I missed my chance to buy here. Now the markets have bounced. I'll get long on the next pullback. And then the next pullback doesn't come, and the markets continue higher. Okay? Then the markets continue higher. And now you're stuck until you finally end up chasing the market higher, and then you buy up here. Do you have any idea of the opportunity that you've missed out buying here instead of buying here? That's assuming that the bottom, that is the bottom. I don't think that necessarily that it is. But this is why it's so important for you to actually scale into your long-term portfolios as markets decline. You guys have got to realize that, and hold on a second. We have 1,400 people that are watching this live stream right now, and there are 493 likes on this live stream. That is a major problem.
That's very disappointing.
I want to see at least 500 more likes right now from my TTG fam. Guys, get to smashing that like button. Get to smashing that like button, guys. Hit that like button. I want to see at least 500 more likes. That's disappointing.
Guys, you need to smash the like button if you like this suit jacket. If you like the flamingos and the palm trees, then smash the
We're
like
trying
button.
to get likes, Lenny.
What did he say?
He said we're trying to get likes.
Oh,
738. Come on, you guys can do it. I believe in you.
I believe in you.
That's not what I said.
how are you feeling, Adam?
Like I have COVID. Chest hurts. Been coughing a bunch.
Adam refuses to take a day off when he's sick.
I'll take it off this. I'll take it off. I'll take a day off this weekend.
Take this weekend off. Take one day this weekend off.
Well,
You know what? I'm gonna take off on Sunday.
yeah. Why would you not? We're just gonna sit here and make bad jokes until we get to another 170 likes. We're 170 likes away.
If we get to those that 170 more likes, I'll tell you the backstory behind the suit.
Nope. We want them to like it.
You don't like this?
Nobody. Stop it. Anyways, I've had COVID twice. That's with 4 shots. So shout out to Pfizer. You guys make a hell of a product.
Did you say you have? Would you say 5 shots?
4.
Oh, 4 shots.
So 2 shots. Yeah, you beat me. I only have 3 in me, I think.
All right, guys. I'm gonna go back to.
Joe says, "I work for Pfizer. Thanks for your money." Yep.
Joe, trust me, his money didn't go to you. Trust me, his money didn't go to you, Joe.
All right. Let's get back into it. Mike, reshare. Mike, reshare your screen.
Yes, let's reshare. All right, back to chats. All right, guys. See, that's what I'm talking about. Okay, so you have to realize something. This is an investing rule that I live by for my entire life, and I will continue to live by it till the day I die. I look back in my lifetime, what are the worst stock market crashes in history? For me, 08, 09, about a 55 or 57, 55% decline in the S&P 500. Dot-com bubble, again, about a 50, 55% decline in the S&P 500. So I like to gauge my absolute must-buy opportunities in my long-term portfolio on percentage drawdowns in the S&P 500. Whenever the S&P goes down around 15 to 20%, I don't care what the reason is, because more often than not, that 15 to 20% drawdown and decline will be as far as it will go. You've had a lot of pullbacks throughout history that have went around that 10 to 20% and then ended up never getting any worse. There are a select few number of times that you can count on one hand over the last 60, 70 years how many times the S&P has gone down more than 20% in a single year. You can literally count on one hand how many times that has happened. So when I have situations where the S&P goes down 15%, 20%, no matter what the reasons are, you've got to buy something. And that's where we were a couple of weeks ago in the beginning of May when I announced to the Teachy fam that I was allocating about 20 to 25% cash. And I went ahead and I started adding to a couple of names and I started nibbling on some stuff in my long-term portfolio. And that's something that I'm going to always do for the rest of my life. Because the way that I look at it is in a worst case scenario, in a doomsday scenario, what am I looking at? About a 50 to 55% decline in the S&P 500. Because 0809, well, that was horrific. That was a real disaster and a real doomsday scenario. And the S&P went down about 55%. So I look at that as my backstop. I don't bet on the doomsday scenarios because events like 0809, events like the dot-com bubble bursting do not happen very often. They are not the norm. The norm is to get a 10 or 20% pullback in the market in any given year, and then the markets go back to reverting back to their mean average, which is a 9% gain on the year. That has historically been the average return on the S&P 500 per year. Okay? So whenever there's times when you go down 15, 20%, I say you got to buy something. If you get to a point where the S&P is down 25 to 30%, you've got to buy a big chunk. And that's what I'm looking for. I'm looking for about a 25% decline in the S&P 500 to where I'm going to take a huge bite in my long-term portfolio. Then if you go down worse than that, and if you find yourselves in a situation where you're more than a 30% decline in the S&P 500, you're talking about there has to be a recession with that. Otherwise, the markets are not going to go down that much of a decline without there being any type of recession and real macro deterioration or a macro environment that is just going backwards instead of going forwards. Then you've got to take that last final 25% of your cash and you got to put it to work. Because when I look at doomsday scenario, my backstop, and this is for me, this is what I do, this is my opinions, this is how I go about managing my own long-term portfolio, and you guys can take this information and do with it whatever you want, but I'm giving you what I do with my money. That's when you take that final 25% and you put it to work. And that's what I did during COVID. During the COVID sell-off in 2020, the markets went down about 15 to 20%, 25% of my cash went into the markets. Then we went down about 25 to 28%, and then 50% of my money went into the markets. And then we went down to 35%, and I missed that last entry down there at 35%, which would have actually been the actual low of the COVID sell-off. I missed adding on that day, and the markets bounced a little bit, and then I ended up getting my last, putting another chunk in, and the markets then just recovered. But even if I was a little bit early and the markets went down another 5 or 10% to go down to where 50% drawdown, that's kind of my backstop for as bad as it's going to get. Because when I look back in history, all right, of the worst stock market crashes in my lifetime, that's where the S&P 500 drawdown took you to. Now I'm talking about the S&P, which is the biggest example of, the stock market. You're talking about 500 of the biggest companies are in the S&P 500, as opposed to NASDAQ is very heavily tech weighted. It's also, there's a lot of biotech in there as well. So the NASDAQ doesn't really give you the bigger picture. The NASDAQ is going to be the most volatile out of the indexes. Okay, now like you see this year, the NASDAQ went down 30%, the S&P only 20, the Dow even less, right? So I like to base it off of the S&P. And that's kind of what I've done throughout my entire life. And that's what I'm continuing to do as we're making new highs again, 414.50 now on the SPY, 414.50.
It kind of reminds me of a quote by Shelby Davis. If you're a long-term investor, he had a quote that I used to put this on the side of my desk and share it with my clients all the time. It goes, "You make most of your money in a bear market. You just don't realize it at the time."
Yep.
So when you're buying these dips and you're buying it near the bottom here after retracement. And another thing I used to ask people, I would say, 1987, the crash, Black Monday, when the market was down 22% in one day, I would say, how much was the market down that year? It was the year of the crash. And people would be like telling me, I don't know, 8%, 12%, 15%. And I would say, well, no, it was a trick question because the market was actually up that year.
Yep.
And, the same thing happened in 2020. In 2020, we had that pullback that was from the peak to the trough, 34, 35%, but we were up 16% for the year.
Yep.
So, people have to have a longer perspective on things.
Absolutely. Great point, man. I love that quote. That's a beautiful quote. I love that. You make your money in a bear market. You just don't realize it at the time. I love that. I love that so much.
We'll get it framed for you.
Yeah, no, that's awesome. I'm gonna use that one. That's a good one. I forgot where I just literally lost my train of thought because I was so impressed by that quote. I forgot what I was gonna say. Since that, I really did. I forgot.
Sorry.
No, it's okay. It was worth it. It was worth it. It's a great quote. But even talking to your point about like how much were we down during the 87 crash when the markets were down, over 20% a day, we finished the year up. COVID, we went down 35% by March when we bottomed, and we were up 16% by the end of the year. 1970 is the year that I keep going back to and I keep reverting back to as an example, because this year reminds me a lot like 1970. And in July of 1970, the S&P was down 27% in July of 1970. By December 31st, the S&P was down 0.9%.
Right.
0.9. After being down 27% in July. So you're more than halfway through the year down 27%, and the market did a complete 180 and basically ended the year flat in 5 months.
Right.
So to recover 26.1% out of the 27 decline, obviously it's different percentage going up, but I mean, of the 20%, 7% we went down, to take back 26.1% of that in just 5 months is nuts when you actually think about that. And that's kind of what you saw during the 2020 COVID sell-off. We went down 35%. It took like 6 months and we were back to all-time highs.
Right.
It's like that's how fast markets can shift. That's how fast sentiment can change. And this is why you can't try to pick the bottom. It's a sucker's game trying to pick the bottom. It's a fool.
Real quick, Mike, I don't mean to interrupt, but I just don't want to put Glenny on blast, but I found a picture of him from his youth that will explain the suit that he's wearing. I'll just put it up on the screen. So that's Glenny right there as a young man. I'm pretty sure that's his boss, Bernie Lomax, and that's Glenny's friend. But yeah, this is if you look at Glenny. I mean, if we can, hang on a sec. Let me actually.
You used that before, and you had me in the middle.
Let's just put this side by side here, so you guys could. Glenny, can you stand up for us, please?
No.
Okay.
No.
I just, it is actually perfect. Yeah, there we go. So, just a little bit about Glenny. All right.
shorts.
You guys are doing great.
You can't. Can I sit down again?
Can I sit down? Excellent.
Because it messes up the. Yeah, I'm not wearing pants, John.
Who wears pants?
But I'm wearing
naked here. I don't have any pants on. Who wears pants?
Actually, I have the matching pants to this jacket. I was going to cut them and wear them like Bermuda shorts.
There you go.
Walk around.
Real quick, keeping with the late 80s, early 90s theme, when Glennie stood up, he was fading like in the movie Ghost Dad.
Yes, he was. That was good.
I don't want to get this video taken off, so I will not be putting a picture of Bill Cosby on here, but I'm just saying
Okay.
that's what he looked like. All right, I'm done.
Thank you. What were we talking about? Okay. Can I ask you a question, Michael?
Sure, man.
Do
Shoot.
you think what I've seen in the last couple weeks? Well, a couple weeks ago, there were rumors that some hedge funds were going to start liquidating because, they operate in a 2 and 20 type fee system. And if their portfolios are down 30, 40, 50%, you're not going to get that 20 because you have to, crush it for the end of the year in order to get back to equal or to have a profit. So do you think that was going on in the last couple of weeks?
I don't think
there was
when you say
about Tiger
liquidating, you mean like closing up shop?
closing and then coming out with another fund. So they start at zero instead of taking their liquidating with their 40% loss, because in order for them to get paid, they have to actually get, they get paid that 20% on what they did for the year.
Right.
It's kind of a cheap way you can start out at fresh at zero and then the market recovers and now you're getting paid on 40% rather than being equal.
I don't think that, I don't really think that had a lot to do with it. I mean, your big staple hedge funds are not, they can't do that. You can't have, maybe like a small family office fund or like a fund that's got just a couple $100 million under management with not a long investor base. Right. Maybe they can pull some funny stuff like that. But that would really be a blow to your credibility. And I think you'd have a pretty hard time if someone would say, oh, listen, I'm down 38% this year. I'm just going to liquidate and start a new fund. I think that you would have a pretty hard time as a hedge fund manager going out and raising additional capital or convincing your current investors to stick with you if you did that. Your current investors would want to say, well, instead of you just losing 38%, get your FNS in there and do what you're paid to do and make that money back. And you still have half a year to go, get to work type of thing. So, did that happen? Maybe. I don't. But
that was a rumor about Tiger Global specifically. Tiger was down about 50%.
Oh yeah, Tiger, and then Melvin Capital liquidated their stuff too.
Okay.
Right. So, you definitely added to probably the selling pressure when you have places like that are liquidating, and some places were liquidating, but I don't think it was like I don't think like the price action would have been different if that didn't happen, Okay. I just think that it was just a liquidation, not meaning hedge funds were actually closing, but you had the highest cash position that we've had in like 20 years. So, you got to a point there in May where the positioning was extremely bearish, where everybody has cash on the sideline, more cash than what they normally do. Like you have a lot of hedge fund managers that in their filings are talking that they have the largest percentage of cash that they've had in the last 15 years sitting on the sideline. So, all it takes is one little push in the right direction and that capital finds a home. and that's when you get these bounces. So I just think that it was like overly bearish positioning that all just came together very, very quickly, and it was a very one-sided market. Is kind of what I think just took place. I don't think it was necessarily like, a bunch of hedge funds are like closing up shop because Melvin closed. You had the issue with Tiger. I don't know really of others, but during every single market decline, like severe market decline or like significant rather, maybe not, because this isn't severe. Down 20% is not a severe market decline. It's a significant market decline, but it's not severe.
Well, for the overall SPY, it isn't.
Right.
If you take
for the overall SPY, I'm just saying, like, when you have, there's some individual stocks that people got absolutely blown up on. You look at like
FANG stocks are down.
Yeah. You look at like Viacom, like remember the whole Viacom issue? Like, I mean, some of these stocks got really, really blown up. But whenever you have like significant market declines, you always have somebody who had horrible risk management that was over leveraged, and they blow themselves up. And that's why, like, I always tell people about like the risk management part of trading. It doesn't stop just because you have billions of dollars. It doesn't matter if you've got $1,000 in your account or if you have 10 billion. You can still blow your account up. And these hedge funds Melvin Capital is proof of it. You can still blow your account up, okay, if you don't have proper risk management. And if you're going to be a cowboy and you're not going to control your risk, and you're going to be over leveraged, you're going to be betting too big on one trade or one direction or one idea, you're going to get hit and you're going to get hurt, and you might end your career. And that happened. And that happens every time you have a significant market decline. There's some hedge fund that gets blown up, and it's like, shame on you. You're supposed to be a professional, and here you are getting your face ripped off and getting blown up and losing all your investors' money. It's insane, but it happens. It happens to the best of them. So that it just goes to show you that no matter how big you are, no matter how experienced you are, without proper risk management, you're effed. So, yeah, a member just said to me, Mike, do you remember saying 414 today? Says my boy Glenn Wilson. Yeah, I did say 414 today. Earlier today. I did say I thought that maybe we can get to 414.
Yeah, we're getting there.
Lenny, how about let's recap? You had a pretty sick swing trade, actually, if I'm not mistaken, over the last couple of weeks that anybody with a full-time job could have very easily participated in.
Yeah.
Tell me about it, man. Stop being so damn modest. Tell me about it with that beautiful jacket you've got on.
Now I can afford to pay for this.
There you go.
I only have 3 payments left. So I swung Sun Run, symbol RUN. So there it is, Sun Run. I swung this in the past. I'm going to pull it up myself. Back in February, I swung this stock. And I'm a type of trader that tries to keen in. I can't follow.
Hold on. Wait, Glenn. Hold on. Just give me 1 second. We got a comment here from Irene. How are you? Took a break for a few weeks from trading. Redid the TGD classes. Up 200% on my portfolio this week. That's incredible, Irene. Congratulations. I love to see it. Congratulations. I love that, Irene. Great job. It's amazing what education can do. It is amazing. Congrats. Sorry, Glennie. Go ahead, man. So tell us about
It's okay. So I've been watching Sunrun for a while. My type of trading, typically, I can't keep an eye on thousands of stocks. So I try to focus on a handful of companies that I can get to know in depth. I do additional fundamental research analysis on the company, their prospects, and so forth. like to know him in depth. And so I was trading Sunrun last year. It was brought to my attention. It was put on, I think it was JP Morgan's focus list. Stock had a $80 price target. Um, it's JP Morgan back in September of last year put Sunrun on its top ideas list, said the stock can go up 90%. And if you look at some of the analysts, and I don't always look at analyst expectations, but I kind of want to see. Uh, I, I I sometimes will take a look to see what the better analysts are saying about certain stocks, and this particular one had very good analyst coverage. But I did my own research and figured it's somewhere I wanted to go, especially because of the price of energy. It's an alternative energy company, and
Lenny, hold on 1 second. Just press the pause button real quick. I just shout out to Aga Fox. A new member says, I just joined today and I made $1,775. So thank you. Aga Fox, great job. Great job. Day one. Already making already made well more than your membership fee in your first day. Congratulations.
congratulations.
To be fair, though, that's not the norm, folks. Okay. I always recommend people when you first join True Trading Group, take your time, trade on the simulator, go through the courses. So to be fair, that is not the norm, but still possible. Aga Fox, congratulations.
Congratulations. So if you go back, actually, I'll try to make this shorter, but I've been following it. I only follow a handful of companies that I can know in depth, and I really liked what they were doing. The price of energy was going up. People were getting there. Actually, I got back on the bandwagon back in February on this stock, and sometimes you just have to pay attention to certain things going on in your life or in your own environment. A friend of mine owns a pizzeria, and he posted on Instagram he was really upset. He got his energy bill, he got his Con Ed bill, and it went up dramatically. And so I was like, wait a second, if you're, what are people doing if they have a very high energy bill? And I said, well, they're going to think of alternative ways. Maybe the guy from Sunrun knocked on your door last year and you told him to scram. But now you start thinking, well, how am I going to lower my energy bill? That kind of got the wheels in motion. I went back to looking at the stock. So I entered the trade back in February, had a nice run there, got out. Stock went from 19 to 34. And then I was out of the trade. I waited and waited. I wanted to get back in the trade. Actually, I didn't make the whole run. I forgot how much I made, but I did very well on that one. So this time I'm watching and I'm watching it come down. They came out with earnings on May 11th. Actually, on May 4th, I'm sorry. May 4th, they came out with earnings and they were very good. They were really good earnings, and the stock shot up pre-market, but then sold off. And so I'm watching and watching them, and I'm scratching my head. Couldn't really understand why it was selling off, but the overall market at that time in the beginning of May, if you remember, if you didn't have current earnings, if you didn't have a low PE, you were discarded on the scrap heap. So companies that are trading at high multiples or they're high beta stocks, trading on future earnings, everybody was wiped out. So I was watching and watching, and I was trying to wait for a bounce. I thought it would bounce. I think I got in too early. I put in what's called a trailing buy stop. I got in on the 11th at $19.29 on I think it was like a 16-cent buy stop trail, where I wanted to buy it when I thought it might have bottomed and started moving up again. So it's a tactic you can use. It's a strategy you can use, a trailing buy stop. And so it did actually go up from there, but then it pulled back further. And it took every single ounce of my intestinal fortitude not to stop myself out of the trade when it backed up. And you can see that it actually went from, it bottomed on May 12th at about, $17.50, that area. So I could have stopped out, but I held on to it. And today we got rewarded. The last few days, actually last week, I should say, it showed a lot of relative strength. The market was going down, and the stock was green on several days that the overall market was down. So I was very confident in a move. I thought it might get back to 26. I didn't think it would happen so soon. But so bottom line is 1929 was my entry. I tiered out, took profit on the way up. My last piece of profit was at $29, $26.29. So exactly $7 profit from the 11th. So that's a 36% profit.
Awesome. Absolutely awesome. Guys, and I'm just drawing out for you guys kind of on the 11th, right, Glenn? You said that was the entry was on the 11th.
Yes.
Yeah. So
I thought it would have trouble right around this level.
Yeah. Yeah. So you're talking about, just a beautiful swing trade, guys. And for those that don't know, Glenny, so for those that don't know, there's myself plus 8 other professional traders that are moderators inside of True Trading Group, Glenny being one of them. We all have different styles. Glenny's style is absolutely perfect for people that work full-time jobs because Glenny is more of a longer-term swing trader. Glenny likes to get himself into a position, hold on to that stock for 1 or 2 weeks, sometimes even a month. I've seen Glenny do some trades that have lasted even longer, but these are the type of trades that you can be sitting at work, get a notification on your phone that Glenny has just entered Sunrun at, what was the price, Glenny?
1929.
You can get an alert. Glenny just entered Sunrun at 1929, and now you get an alert today. Glenny's taking profit, $26 and change, and then there's a 36% gain while you're just sitting there at work. Okay, this is why there's so many people. They wonder, how is it that people can make money doing this while they work full-time jobs? And it's all about the trading style that you implement. There's so many different types of trading styles. It's important that you have access or exposure rather to what all those different styles are like, because you might follow somebody on YouTube and you say, oh, wow, look, this person made 20 grand today. I'm going to follow them. They must know what they're doing. They made $20,000. That person's trading style may be absolutely physically impossible for you if you work a full-time job. That person might be a scalper, someone that gets in and out within seconds, maybe minutes. Well, if you're driving around in the police car, if you're teaching a classroom full of third graders, if you're about to do an operation, you're about to see a patient, you're about to lay down some bricks, you're about to walk into a courtroom, okay, you can't get in and out of trades within seconds or minutes. You got to be able to implement a swing trading type of style into your trading group every single day in chat. There's day trades and there are also swing trades. And finding the right style that fits you is important. And that's finding your trader identity. And that's something that we help people do inside True Trading Group is find your trader identity. What style of trading is going to fit best for you? And what style of trading is going to give you the best chance at success? Just because somebody else is successful doing one particular style does not necessarily mean that you will be. There's 2 main factors that go into what style is going to be best for you. One being personality traits, and the second being your lifestyle. And when I say lifestyle, I'm not saying do you like, expensive dinners and lavish vacations. I'm talking about how much time do you have to actually be sitting in front of a computer screen? Because if you're not someone that can be in front of a computer screen all day long, well, then you can't be a scalper. Okay. So this is a trade that Glenny made that anybody that worked a full-time job, you guys could have been able to participate in. This was an absolutely beautiful trade. Glenny has been stalking this thing. He's been following it for a while. He knows the stock like the back of his hand, and it was very nicely done. So Glenny, congrats, man, on a home run trade. Congrats on a beautiful jacket. And thanks for joining me today on this live stream to kind of walk us through the final trading hour of the week. And I hope you have a nice weekend.
One thing I'll just add, I threw out the stock to swing, but I know some people that bought the options. And you could have bought on the 11th. I know people that bought the $20 calls on the 11th for about $1.75. Those things are traded right now at $6.85.
Wow.
I don't know if they still had them. I know people were taking profit on the way up, but the options were crushing.
Wow. That's sick. That's sick. That's big money, folks. That is big money. Well, Glenny, congrats, man.
Thank you.
As the SPY is making new highs yet again. We are now at a fresh new session high, up 2.3%, knocking on 415. Just an unreal day.
And Sunrun was just up 11% for the day. So it's had a really nice day.
Yeah, really nice day. A lot of stuff. A lot of stocks having really nice days, man. A lot of them. So, Glenny, thanks a lot, man. Thanks for joining me to kind of wrap up the week. Have a great weekend.
You have a great weekend.
Thank you. I got some family stuff going on. I'm excited. Going to relax, go in the pool, have some fun. It's supposed to be some nice weather here in the Northeast, so enjoy.
Absolutely. Same to you.
Great stuff, man. Good trading. I'll see you next week.
Sounds good.
Awesome, man. Okay, folks. Well, as we've got about 2.5 minutes to go before the markets close, that is a fresh new high on the SPY, $415 on the SPY. Guys, make sure you set your reminders now. Monday at 8:30 p.m. Eastern, we are going to be going live here on the True Trading Up YouTube channel. We're going to be talking about, is the stock market crash over? Is the recession canceled? Or is this just another bear market rally? Is this just another what we saw in March, right? When you go back to March, okay, when we go back to March, you guys remember that? Is this just that? Or is this something else? All right, so we're going to talk about that on Monday night. So typically we go live on Sunday nights at 8:30 p.m. Eastern, typically. But obviously Monday the markets are closed for the holiday, and we are going to be going live Monday night at 8:30 p.m. And I'll walk you guys through what I think the markets are going to do next week and what I think that this means for this little bounce, where I think it runs out of steam, where I think we get a pullback from, and when we're going to be talking about, the next entry point for the long-term portfolio. Okay, so make sure you guys set your reminders at 8:30 p.m. Eastern on Monday. We're going to be going live to talk about what the week ahead holds. All right. So there we have it, folks. There we got a couple seconds before the bell, and we are just pushing, man. New highs, fresh new session highs on the SPY. There it is. Boom, 415.15. Brand new, fresh session highs. You look all the way around. Amazon back to 2,300. Tesla back to 760. Apple back to 150. All is well in the world. NVIDIA back to 188. AMD's up there around back over 100. Even AMC is back over 14, getting itself back in the mix. All right, so everything giving you a nice little rally here today, guys. It's not just the big stocks in the market. It's also the small stocks in the market. Everything kind of lighten up the board for us here. And then we also have SIGA. SIGA is a stock that we're going to have on watch, guys, for next week for a possible short squeeze. SIGA, I think a lot of shorts are trapped. here in SIGA. I would watch this thing on Tuesday. Get SIGA on your watch list. SIGA will be one of the stocks that's on my watch list for Tuesday. So make sure that you guys get your butts in chat. This is going to be on the watch list. Okay. But what you're seeing, this action that you're seeing today, guys, this is why you don't bet on the end of the world, right? This is why we don't bet on the end of the world. I've been telling people during this entire market decline, do not bet on the end of the world. I had people come on these live streams and I'm telling people this is one of the greatest wealth building opportunities of our lifetimes. This downward move in the markets that you're seeing right now, it's a gift. It's all the stocks that you loved last year whose valuations were completely out of control and made no sense. Now all that froth has been removed. I made the analogy on the live stream the other day. I made the analogy about the foam on a beer, right? Nobody wants the foam. Brush the foam off, get down to the good stuff. That's where you're getting a lot of these stocks. You've brushed off the foam and the excess valuation, and you're getting down to the good stuff. And that's where you find yourself. Don't ever bet on the end of the world. I've been telling people for weeks now that this is one of the greatest wealth building opportunities of our lifetimes. And you just saw the biggest weekly inflow into equity funds than you've seen in the last 10 weeks. So what does that tell you? That tells you that institutional investors are getting their cash together and they're getting it ready to take advantage of the opportunities that are in this market. So if they're doing that, then why aren't you? And I've been telling people that your window of opportunity is closing. I've been telling you this now for weeks. Your window of opportunity is closing. And if you take a look at the move that a lot of these stocks made today, there's a lot of people on this live stream that maybe felt like, I just closed my last position and I'm officially over PDT. Yes! Boom! Hell yes. Don Paulson, congratulations. Just crossed over the PDT mark. Congratulations, Don. That's amazing. That's incredible. I love it. I love when members crack over the PDT rule. I got to tell you, I think the PDT rule is literally the dumbest rule that has ever been instituted and implemented in financial markets. It is the stupidest rule. In my opinion, it does the exact opposite of what it is meant to do. If I ever ran for president, the first thing that I would do would be to get rid of the PDT rule. And if I campaigned on that, that's easily like 20 million votes right there. Maybe even like 40 million votes. I think I'll get 40 million votes right there if I just get rid of the PDT rule. I'm halfway there. I'm halfway there to winning the election just on 40 million people that I'm just going to say no more PDT rule. So I'm just going to try it. I'm trying it. Mike Edward, 2024. Let's go. Let's do it. No more PDT rule. Everybody get behind me. What are you shaking your head at, man? No more PDT rule. It's going to be good for everybody. I got this. I think I'm a likable guy. I think I can do it. I just need someone to back me. Like I need, campaign funds. So, all right, guys. So this is what I'm talking about though, and although I'm telling you here, I don't believe that that's it. We just rally from here. I do believe this bear market rally can take us a little bit higher, but I do believe you will get another pullback. And when that pullback comes, don't be scared. Don't be petrified. Don't say, oh my goodness, oh, here we go again. Remember how you feel right now. This is why it's important as the markets go down, you buy. This is why, because I nibbled on some stuff. 20 to 25% of my cash went into the market over 2 weeks ago when we were down in early May, when we cracked under 400 and the SPY was at like 392. Now the SPY is back to 415 and I've got 20 to 25% of my cash allocated into the market and I spread it across 9 different stocks. My TC fam, you guys got that list. It's in the blog post from May 10th. If you missed it, you'll see the 9 stocks that I went ahead and that I bought on May 10th. Okay. Maybe between May 10th and May 11th. Okay. So this is what I'm talking about. Like, this is why you don't want to put the pressure on yourself to have to wait for the market to try to catch the exact bottom, because you're never going to catch the bottom. And as soon as you get a bounce, you think the bottom's in, you panic, you chase the market higher, and you're going to end up buying 10, 11, 12, 15% higher than where you could have bought if you just weren't scared of seeing the market go down. When the markets go down, you have to stop looking at that as a bad thing and start looking at it as an opportunity for long-term investors. Every single time the stock market has declined 20% or more throughout history, those moments in history have proven to be, every single one of them have proven to be tremendous wealth building opportunities. And if you had the education and you had the wherewithal to say to myself, okay, the stock market's declining, let me take a look at a bunch of really good companies that I like for the long term, and you had the wherewithal and the patience to invest in those companies at that point in time, you would look back years and years down the road and say, man, I sure am glad that I stepped in and I bought during those times. You have to buy when you don't want to. When it looks really scary, that's when you need to buy. Okay? That's when you need to buy. This week, that's the moment. Okay? And that's exactly what we did a couple of weeks ago. And I still do think we're going to get another move to the downside. I can't make myself any more crystal clear than that. But I told you a couple of days ago, this bear market rally, I think, is going to test people. It's going to make you feel like the bottom is in. And it's going to make people chase the market higher which will push this bounce even further, which further makes people think the bottom is in. But we're still not out of the woods yet. We still got a lot going on with inflation. We're about to start balance sheet runoff. This volatility is not going anywhere, but this volatility equals opportunity. And if today's price action in the market is not enough proof of that for you, that this is an opportunity, look how fast the markets can recover. You went from completely pooping in your pants 5 days ago. 5 days ago, you were pooping your pants. Now, all of a sudden, you think sunshine and rainbows, and it's back to all-time highs. And everyone's like, did I miss it? Did I miss it? Did I miss it? But literally 5 days ago, when I'm saying, guys, this is the greatest wealth building opportunity of your lifetime, you're like, nah. But now, all of a sudden, you're like, I missed it. Okay, this all goes back to the long-term investing workshops that we've conducted live with members. It's also been recorded. You guys can go back and you can watch it. We've got a lot of other educational pieces that we do about long-term investing specifically, because I told you that I thought that this year we were going to have a really good chance to add to the long-term portfolios. And so far, that has been absolutely spot on, and it's been true, and as true can be. Okay, so this is a moment for you guys to really be excited about what's going on in the markets, and get yourselves educated, and stop letting yourself always be late to the party. You're always the last person to show up, okay, and then the last person to leave, and that's not what you want to be. Okay, you're always the last person to show up to the fun, and then after the fun's over, you're the last person still standing there with a drink in your hand, and you're wondering where the hell did everybody go? And the cops show up, and who gets in trouble? You. Okay, that's what you guys got to stop doing. You got to get on the right side. All right. So, folks, I'm going to walk you through real quick. This is it. This weekend is it. Okay, this weekend is it. Monday at midnight. The price of the teaching membership is going up to over $1,500. No ifs, ands, or buts. But between now and then, you have your last chance to get a 49% discount. It brings the price all the way down to just $1,120. Okay, it brings it all the way down to just $1,120. So the price of the membership is normally $2,212. But tonight through Monday at midnight, you can get a 49% discount. It drops the price all the way down to just $1,120. Okay, let me tell you guys briefly about what you guys will be getting access to in the teaching platform. I'd first like to know who is with us tonight on this live stream that is brand new. If you are not a member of True Trading Group, I would like for you to type the letters TTG in chat right now. Please just type TTG. If you're not a member of True Trading Group, I want to see what we got going on here, what we're working with. So go ahead, type the letters TTG if you are not a member of the True Trading Group family. Let's see. We got Joe, Lucas Wooten, Aaron Roth. Yep, SPY still pushing. Yep, SPY is still pushing. Herb. All right, Fading Petals. Great, guys. So a lot of new faces here. People that are typing TTG. So welcome all of you that are not members of the TTG fam. What I'm going to do here quick, guys, is I'm going to walk you through what you're going to get access to as a member of True Trading Group. And we'll show you guys the platform and everything as well. So for those of you that want to join the TTG fam before the price goes up, because this is the last week. Okay, this weekend is it. All right, we've been running a Memorial Day weekend sale. You got a 49% discount. But Monday at midnight, that's it. Sale's over, and the price is going to jump up. The price is going to jump up to over $1,500. Okay. So if you guys have ever, I'm telling you now, you just saw the largest inflow of cash into equity funds in the last 10 weeks. The largest inflow. While hedge funds have been sitting cash on the sidelines, you just saw the largest inflow of cash into equity funds in the last 10 weeks. That means smart money, institutional money, is preparing themselves to take advantage of what I've been saying, that this is a great wealth building opportunity. They're getting ready for it. You should have already been getting ready and preparing for this. You should have already been getting ready for it. But if you still haven't, I'm telling you guys now that window of opportunity is closing. Look at how fast the markets bounce back at the slightest sign of good news, that inflation has started to come down. The markets just explode 10, 15% off of that May low, just like that. And if you blink, you guys are missing these opportunities. So what we're doing now is there are 40 spots available. Okay, between now and Monday at midnight, there are 40 spots available for people that still want the THD program at 1120. After those 40 spots are up, or after midnight on Monday, that price jumps to 1500. This weekend is it. That's it. No ifs, ands, or buts. When you join the THD family, you have to understand you're getting access to the same level of education that I received when I worked at a hedge fund in New York. It was my first job out of college. I wasn't able to touch $1 of their money until I went through a 3-month training program. That level of education is what you are going to get access to as a member to Trading Group. It is in-depth and complex, yet easy to understand and implement quickly. Whether you've never traded stock a day in your life, or you've been doing this for 10 years, this platform can help you guys reach your goals. I get asked all the time, what's the difference? What makes True Trading Group different from other trading courses? For starters, it's because we are a platform. Yes, the platform contains courses, but we are so much more than just courses. Okay? You're going to get access to tools from today's top fintech companies that professional traders use to make better decisions. You're getting access to tools from Benzinga, TradingView, Quote Media, CBOE, Polygon, Trade Ideas, ETNA. These things would cost you over $4,000 to $5,000 a year if you went to the companies directly. Don't do that. Whether you join True Trading Group or not, you're probably going to buy some, if not all, of these tools. Don't do that. We've spent years building relationships with these companies so that we can offer their products on our platform at no additional cost to you. It is all included when you pay the $11.20 you join True Trading Group. But that $11.20 is only good for the next 40 people or until Monday at midnight, whichever comes first. After midnight on Monday, you're looking at a $1,500 price tag for this membership. You guys can get it now for $11.20 for the sake of the Memorial Day weekend holiday. Okay. And on top of that, you're going to be joining a community of active and educated traders and investors, about 9,500 strong now, the THD family, that are led by our team of moderators that have over 100 years of combined experience trading stocks, options, crypto, futures, day trading, swing trading. We also do long-term investing. But results actually matter at True Trading Group. We're not just broken promises and empty words. Your results matter, and they're quantifiable and measured through your own P&L. And the bottom line is that THD members are making money and, more importantly, becoming better traders. And if you don't believe me, just watch this. Guys, if you're a member of True Trading Group, I'm talking about if you are a member, are you making money and becoming a better trader because of TTG? If that answer is yes, I'd like for you to type the $sign in chat right now. Again, type the $sign in chat right now. Okay. If you are making money and becoming better traders because of TTG, anyone that's not a member, just pay attention to how many people type the $sign. These are your peers. These people found True Trading Group the same way that you did. Okay. Look at all these $signs. Okay. Guys, I'm going through now the sales part of this live stream. Ask yourself, why are all of these members still on this live stream? Because we give out golden nuggets of information on every live stream, and we support them and they support us, and we're one. We're the THG family. You're not just joining and just getting access to myself or the other moderators. You're getting access to an army of 9,500 members that are going to be there with you by your side to help you throughout your process. They found us the same way that you did, and that's one of these live streams. They had all the same excuses that you had. They had small accounts. They work full-time jobs. They've lost money in the market before. They've had no experience. But yet here they are now typing the $sign. When I ask them very simply, are you making money? Are you becoming better traders? If that answer is yes, type the $sign. If they can do it, so can you. Okay. You're also going to get 2 small private study group sessions, okay, with your membership. So next 40 people that go to ttgoffer.com and enter the coupon code TTG121, okay, you're not only going to get the 49% discount, which is good only until Monday at midnight. All right. You get the 49% discount. You get 2 small private study group sessions. This way you can get some individual attention from one of the traders at TTG to ask your questions, go over some topics you're unsure about so we can speed up your learning curve. All right. Those 40 people are also going to get a brand new free laptop. That laptop will be yours totally for free upon completing our courses and quizzes. We even cover the shipping costs. It's totally free. It's going to be an Acer, HP, Asus, Dell, or Lenovo. I'm learning a lot from watching the live streams. I don't need the membership. You are completely wrong. I'm glad that you are finding value from the live streams. I really, truly am, Johnny Boo. I really am. But what we talk about on these live streams is about 10% of the education you're going to get when you join True Trading Group. There's a lot of people that have actually improved their trading just from being on a live stream. A lot. But if you've improved your trading from just being on a live stream, imagine what your trading could be as a full-time member and getting access to the entire pyramid and not just 10% of it's like an iceberg. It's like the tip of the iceberg. Imagine if you got access to the entire thing, what your trading would be like. Right? Imagine that. There's a lot of members on here that actually were like, wow, what this guy taught me on a live stream helped me make money and helped me do better. Imagine if I got all the rest of the information where my trading could take me. So you're also going to get, like I said, guys, that free laptop. And then last but certainly not least, you'll see me put my money where my mouth is. And I told you before that results matter. And man, I mean it. And I mean it so much. And I'm so confident in our ability to help you guys become successful that I'm willing to say that anyone that joins True Trading Group, you have 1 year to go through our courses, pass our quizzes, and attend one study group. Okay? If you do those 3 things and do not make the 1120 back at least one time throughout your membership, I'll give you double your money back. I'm not kidding. You'll pay 1120. If you do not make 1120, I'll give you $2,240 back. You have the whole year to do that. I'm not telling you got to do this in 30 days and you got to jam, study like crazy and go through the courses all within 30 days. I'm telling you, you can come to me on day 364 and say, Mike, I went through the courses, I did the quizzes, I attended one study group, and I never made that 1120. I'll say, I'm sorry our program failed you. Here's $2,240 for wasting your time. That's how we hold ourselves accountable to you. Okay? That's how we hold ourselves accountable to you. Everybody welcome Chase. Chase is the newest member of the group. There's now just 39 of those laptops left before the price goes up to $1,500 on Monday. You guys can get the 1120 price point right here, right now. Only the next 39 people. Everybody welcome Chase. Go to ttgoffer.com. Use the code TTG121 right here, right now, guys, before those laptops run out and before that price jumps up to $1,500. Monday night at midnight, this is over. This is our MDW sale. It's over Monday night at midnight. You'll know you're getting one of the laptops when you go to the checkout page. As long as you see a laptop in your checkout cart, that's how you know you're one of the 39 people. As long as you see it, you're good to go. Make sure you enter TTG121 coupon code, click apply code. That'll give you then the discount. All right. So that's that double your money back guarantee, folks. But let's be real. You're not joining True Trading Group to get a refund. You're joining True Trading Group to make money. But that double your money back guarantee is there to protect you, and it's there to hold us accountable to providing you the education, the guidance, the mentorship, and the tools that you need to give you the best chance of becoming successful. And that's how we hold ourselves accountable to you. We have a retention rate of about 78%, which means 78% of our members are renewing their membership or upgrading to become lifetime members. And since 2016, we have a refund rate of 2.48%. 2.48%. That is how much of our user base we have had to refund since 2016. And I share that number with you, not just to prove that, or not just to show you how infrequently that we get that refund request, but to prove to you that it's real. Don't make back the 1120. As long as you do those things, I'll give you $2,240. All right. That's how we hold ourselves accountable to you. If anybody has questions about the membership, you can send a text message right now to 201-775-9702. You guys can text over the weekend there as well, 201-775-9702. Don't call that number. It is a text-only number, 201-775-9702. And when you sign up, you do not need to enter your address to get that laptop, okay? Once you sign up, you will get a welcome email that has instructions on how to claim your free laptop, okay? You do not need to enter your address. And for Memorial Day, we're going to open this deal up to trial members as well. If you're listening to this live stream and you are currently a trial member, okay, and you want the 1120 price point, otherwise it's going to cost you as a trial member $14.20. Don't pay $14.20 if you guys want to join TTG. Take advantage of the $11.20 price point right now. If you are a trial member, hear me though loud, hear me clear. You first have to log into your trial member dashboard. Okay? You have to log into your trial member dashboard. Then click the big green join now button. Then enter TTG121. Okay? That's if you are currently a trial member. All right? If you are currently a trial, you must log into your trial member dashboard first. Then click the big green join now button. Then enter TTG121 coupon code, and you too can get the $11.20 price point. All right, guys. Again, that's a text-only phone number. Do not call that number, just text. All right. So there you have it, folks. What I'll do now, let me just touch upon a couple of key levels for the overall market. Let me just touch upon some key levels for the overall market, and then I'm going to walk you guys through, what the platform actually looks like. Okay. All right, guys, we're going to save that for Monday. All right, we'll save the Sunday. We'll save the analysis on the SPY for Monday. All right, what I'll do now is I'll show you guys what the platform actually looks like, so you guys can see all the tools and resources that we have and what you're going to be getting included with your membership. All right, you're going to get our chat room, which is where the mods and I share our screen. We're live on the mic throughout the course of the trading day, calling out our trades in real time, providing you guys market analysis from pre-market all the way through until after hours. All right, we're not there. We're not just gone after 2 hours. You know, to fend for yourself. You're also going to get to use our mobile app, which will let you guys be connected to chat even if you're not in front of your computer. You can see the screen share. You can get real-time push notifications whenever a moderator enters or exits a trade. As long as you can listen to music at work, you guys can use that mobile app. Okay. You're also going to get 2 small private study group sessions. Your chance to get individual attention from a teaching mod, so you can get your questions answered and help speed up your learning curve. You're going to get the Benzinga Pro live news feed that gives you live up to the second news alerts. This would cost you $1,400 if you went to Benzinga on your own. Don't do that. It's free with your membership to True Trading Group, and it costs just $11.20. You also get TradingView's premium charting software. It's one of the most commonly used charting softwares by active traders. This would cost you several $100 if you went to TradingView on your own. Don't do that. It's free with your membership to True Trading Group when you pay the $11.20. Trade Ideas Scanner is the industry standard AI software that will make sure you are always focused on the hottest stocks during the day, the ones that are making new highs, new lows, have a surge in volume. This too will cost you several $100s a year. Don't do that. It's free with your membership when you join True Trading Group. You will also be able to use our simulator. Our simulator will let you trade stocks and options with fake money, but with real-time data, so you can practice implementing what you learn in the courses. Please prove you can make money with fake money first before you start risking their hard-earned cash. This simulator is used at universities across the country like Berkeley Haas, Illinois Tech, and Cal State Fullerton. It would cost you several $100s a year if you went to the company on your own. Don't do that. It's free with your membership to TTG for just the $11.20. You'll also get our own proprietary scanner that lets you scan for crypto. You'll get dark pool data, unusual options activity, stuff that used to only be available to professionals. Now it's at the fingertips of the TTG fam. You get a journal that tracks your trading and gives you statistics, so you can figure out what you're doing wrong, so you can make adjustments. A social sentiment scanner will go through Reddit, stock twits, and Twitter and tell you what ticker symbols are being mentioned most. Unlimited analyst ratings, so you can see how many analysts have a buy, sell, or hold rating on any particular stock. Our watch list, where the mods are focusing their attention and how they plan on trading those stocks every single day. You guys get access to that as a member of TTG. And then you have all of our courses. Our courses are a simplified yet expanded upon version of the stuff I learned that I worked at the fund in New York. There's beginner and foundation courses, advanced options, swing trading, trader psychology, crypto, you name it, we've got it. There are no VIP courses that cost more money after you join. There are no upsells for courses. There are no upsells for tools. All of the tools and courses I just mentioned to you are included with your membership for just the $11.20. Then on top of the courses, there's a video library. There's over 200 hours of additional educational video content These are workshops and webinars that we have conducted covering a variety of different trading topics, like how to trade while working a full-time job, how to resist FOMO, how to grow a small account, just to name a few. And then when you're a member, you can actually attend all these workshops live. Time you guys invested in something real, folks. Now, I can't promise you success. I can't guarantee you guys are going to make money and make millions of dollars, but I can promise you a real chance of developing the skills needed to become successful as long as you want to put in just a little bit of effort. And I can promise you that if you fail to make the 1120 after doing those 3 things, I will give you back double, $2,240. That's how we protect you, and that's how we hold ourselves accountable. And I have no problem offering that to anyone that is willing to join the TTG family and give themselves a real shot of achieving their goals. The ball's in your court. You go to ttgoffer.com. You have until Monday at midnight, and then it is done. After Monday at midnight, that price jumps to $1,500. You guys can grab it over the weekend for just $1,120 for the next 39 people. You're also going to get the free laptop. You just go to ttgoffer.com, TTG121 coupon code. If you're still unsure about the program, you guys can still join our free trial. We got a 7-day trial. You can go to ttgthree.com, enter your name and email, no credit card required. Okay. Enter your name and email, and you guys can join us for a full 7 days. Don't wait until Monday to join the trial. Weekends and holidays do not count against your 7 days. You will get 7 full trading days as a member of our trial program. And then, guys, don't forget, set your reminders now. Monday, 8:30 p.m. Eastern, live right here on this YouTube channel. We're going to be figuring out what I think the markets do next week. We're going to go over some key levels in the overall market that we have to be paying attention to. And we're going to see where I think the markets are going to go next week. And more importantly, how we plan on making money from it. So thanks for joining me tonight, guys. You're the best. I love you all. Subscribe to the channel, smash that like button, turn on your notifications. I'll see you guys all Monday night. Have a wonderful weekend.